What's going on, guys? Throwing together a video going over Friday's price action and what we're going to be expecting for the upcoming week. This video is going to be a long one. Those of you who complain about me making long videos, complaining about me compiling thousands of hours of my TA into a 20 or 30-minute video, I don't know what to tell you. I could save you the time right now. We're squeezing in the very near future. With that being said, jumping into the video, starting with the macro on SPY. Once again, descending broadening wedge for a year, breakout, retest, reclaim the triangle, break the triangle to the upside to 444, pull back to the 20 EMA, find a bounce off, and then the past couple of days, SPY has found new 52-week highs. So Thursday hit 450, and Friday 451 and change, another new 52-week high once again on Friday. Day 740 closing over the 200 EMA, golden cross on the daily, all of which is very bullish. SPY is going to new highs. And touching on SPY daily because, like I said a million times, the previous two squeezes, January and June, on AMC and the rest of the meme basket, SPY was rallying to the upside pretty much the exact same way that we're seeing now. This range here we haven't seen since April 2022, over a year ago, and from October 2022 until present day, higher highs and higher lows to the upside. So this looks very good. Symmetry on SPY, once again, the blue box being your middle, one break above the ascending triangle here. Here's your lowest low in the blue, so you have one break above the ascending triangle here. Into the red, you come down, break below that horizontal line at 380 on both sides. The left came a little bit lower to retest the macro of the wedge, bounce up to 418 on the dot on both sides, reject there, bounce on 380 on the dot on both sides. Uptrend to 430, uptrend to 430, three touches on 430 before you break through, reject 438, break higher, reject 438, break higher, and then 450 was what we were looking for, the next stop. We got a pump to 444, so the symmetry is still playing out perfectly. It's just a little bit lower on this side now. So you got the pump to 444, comparable to the 450 pump, came down, found support, came down, found support, double top slightly higher, double top slightly higher, pull back to the middle of the range on both sides, and then you get the break above that we see here. So this pop that we got to 451 would have been the symmetrical equivalent of 458 over here. Like I said, we're playing this out a little bit lower, and now we can get into that on the micro. So here would have been the move on the left, the move that you got to 450. This would have been the move to 450, and then comparably to the move to 444 that we got. Pull back, find support, double top slightly higher, pull back, find support, double top slightly higher. Then you pull back to the middle of the range on both sides. You play the W out, cup and handle, just like I said, on both sides. You get the gap up that we were looking for, and then you got the upside on Thursday to 450. I said on Thursday for Friday you could possibly expect a few dollars to the upside, 452, 453-ish, which is where you're going to find your top, and then from there would be pulling back to the top of the range here. To 442 to 444. So that's what we're going to be looking for now. I think the top's in here, 451 and change on Friday. That looks pretty good for me as far as the symmetrical equivalent of the move over here. And now theoretically what should happen is we pull back to the top of the range here, the top of the cup, which would be 442 to 444, establish support, and should just get a V recovery off that higher. And the next target from there would be 458. So that's what we're looking like on SPY. Again, just being redundant here, where you are here, we would be right here. Having hit this top, you get this pullback in red, and that's what we're looking for now, this pullback in red to the top of this range before you get a V recovery higher, and that target again would be 458 roughly. At that point, the symmetry might break. We'll just see what happens when the time comes. And yeah, we'll just take it one day at a time from there. So that's pretty much it for SPY. Again, touching on SPY every day because the previous two times AMC squeezed, January and June, SPY was rounding to the upside, exactly the same way that we're seeing now. So with that being said, jumping into AMC, the macro on AMC, descending trend line from 2017 over here, comparable to the descending trend line we have here. From the breakdown in the flag from the June highs, you have this descending trend line. Again, macro fractal break right here, that gap down, comparably to the macro fractal break that you see right here, this gap down. You play out that W pattern, that sideways W pattern on both sides before you actually break into the downtrend. Again, the downtrend, you're just laddering down. So the green, more or less a W on both sides. The red, more or less a cup on both sides. The blue, come down, bounce up, come all the way down, curl up towards the end. Come down, bounce up, come all the way down, curl up towards the end before dropping to the flat portion here on both sides, and we would be at the end of it. This orange, purple, and blue here. 3 touches on the bottom before you break the triangle and squeeze. 1, 2, and 3 over here, and we'd be at the end of the blue over here. So squeezing in the very near future here. So that's the macro on AMC, and here's the other perspective that I always show. Remove the color boxes from the flat portion and through some lines. So again, macro fractal break, this gap down right here, the W pattern that plays out. Macro fractal break right here, the W pattern that plays out sideways before you actually get into the downtrend. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Takes you to the end of the blue, and then from there you drop to the flat portion where you have 1, 2, 3 touches on the bottom. 1, 2, 3 touches on the bottom, and from that third bottom you form an uptrend, breaks you out of the triangle, and you squeeze. Again, every iteration here, green, red, and blue, you're coming up on the other side. So the green and the red, you're coming up on the other side on both. The blue, you come down, drop down to the flat portion, play out the flat portion, squeeze, 3 touches on the bottom. And over here, same thing, blue, come down, drop down to the flat portion, play out the flat portion, 3 touches on the bottom, break the triangle and squeeze is what's next. So this looks very, very good. Now getting into the micro, and once again what we do for the micro is zoom in on the flat portion here. The orange, purple, and blue comparable to the orange, purple, and blue here. So we're going to be comparing these on the micro now. Once again, this orange, purple, and blue that we have in our current cycle is playing out right on top of the previous flat portion right here. So we're playing the exact same thing out that we saw back here leading to the January squeeze. We're playing this out again, but we're playing it out on top of this range here as support. So this looks very good. So getting into the micro now, and this is the area chart, the one I always show. So the orange is more or less a W, and it's your first bottom. So you come down to your first bottom, you have chop here. Again, first bottom there, and over here, same thing. Come down to your first bottom, you got chop here, first bottom there. You get a pop there, you have 3 peaks in increasing height, which takes you to the end of the purple. And same over here, you get this pop off and 3 peaks increasing height, which takes you to the end of the purple. The purple more or less just being a cup here in the middle. And same thing here. And then the blue, you come down, break below that horizontal line, bounce above it, and get your second bottom. Same exact thing over here. Come down, break below, bounce above, get your second bottom. From there, you get into the tri-peak on both sides. You get into the tri-peak. And then from the third peak of the tri-peak, you come down to your last bottom, your third bottom here, before forming an uptrend, which breaks you out of the triangle and a straight line into your squeeze. And that's where it would be now, having just came down to our third bottom and in the first iteration of the uptrend here. So again, we're tracking this faster, roughly 3 months faster than the way it played out back here, which is a good thing. And the reason we're playing out faster is because there's more volume. Volume will be relative to speed. This looks very, very good. So that's that. The RSI, again, it's the flat portion of the January cycle on the left and the current on the right. And then the RSI is underneath. It's all color-coded. I'm not going to go through it, but the RSI is the same on both cycles. You could pause the video if you have to. Take a look at it. It's pretty crazy. RSI is the exact same. And we would be in this final blue box here where you get your third bottom, you get the pop off, and you get this pullback here before you get the gap up to the breakout iteration. And this is the RSI at that point, and it's pretty much the same over here. So that would have been our third bottom, get the pop off, and now we're looking for a gap up. We're looking for this gap up here. So that's what we're going to be looking for now, is this gap up iteration, and that will be our breakout. That's what we're looking for next. And with that, and again, same thing. This is the daily chart now. I'll start with the EMAs. So the 20 EMA in black, the 50 EMA in red. 20 is under the 50 the whole time in the orange. Before you break above it, you come underneath, and then you break above it again higher, pretty much at the end of the purple. And over here, same thing. 20 is under the 50 the whole time. Break above it, come underneath, and then break above it again slightly higher at the end of the purple here. And then from there, you come back underneath, crossing the tri-peak, and then break back below again. Over here, same thing. Crossing the tri-peak, break back underneath again, and then, like I said before, the next time the 20 EMA crosses the 50 EMA on the daily chart, we will be squeezing or in the middle of our squeeze. Assuming we get this gap up here, that's what we're looking for next. Again, all the gaps are the same. The flags here have them marked in the exact same spots on both cycles. The 3 gaps you see over here, the black flags over here in the orange box, the 2 green flags here in the purple box, and then the red 1, 2, 3, 1, 2, 3, and then 4 right there would have been the last one, which takes you to your third bottom. From the third bottom, you start the uptrend. So now we'd be looking for the first gap off of the uptrend, which takes you to this iteration here, which is your breakout iteration, breaks you out of the triangle, and that's also at the point where the 20 crosses the 50. So again, we're looking for this gap up now. And I'll get into the tracking with that. It looks like we're there. So that's that. Once again, the breakout in the 4-hour, I showed this in my previous video as well, where you have this macro downtrend. It's a 4-hour chart. Rejection here, rejection here, rejection here, rejection here. Price action got very tight here as we were being pressed up against the resistance. We broke out, broke back into it, broke out again, and then on Friday, that nasty sell-off that we saw was pretty much just a retest here of this macro trend, bounced off and closed above. So again, we broke out of this downtrend, tested as support now, and closed above. So this looks very good as well. The daily chart, once again, this is the final iteration. This is pretty much the past year of price action that we've seen on AMC from the APE dividend back here in August all the way up until today. We are curling to the upside here. Carved a very nice bottom here. Like I said, we completely flatlined here at the end of the macro. Completely flatlined and curling now to the upside. All three of our bottoms here on the daily chart are higher lows. So your first bottom, your second bottom, and third bottom here, and you're forming higher lows on the daily. And then we have this descending trend line here, and support is meeting resistance very soon here. So again, this breakout here more than likely will coincide with the breakout of the macro, and then we will be looking for the macro fractal break, which will be the gap up, and that would pretty much be around $6 if I'm not mistaken. The top of the tri-peak here, that would be our macro fractal break. Of course it could be different, we could gap way higher, assuming that we will, honestly, but just for now we'll just say $6 is the macro fractal break. That's the target that we're looking for, that I'm looking for, that will be kicking off the squeeze. So that's that. Again, the move here that led up to the squeeze January 2021 is a very symmetrical move. It's a W with a tri-peak in the middle. So you have your second and third bottom here on the flat portion, and there's the tri-peak in the middle. Very symmetrical move here, and this is your macro fractal break here. These two gaps up to the top of the tri-peak, which would be pretty much $6 over here. That's what we're going to be looking for. We're going to be looking for the first gap up here. This gap here is what we're looking for from right here. Play out this iteration. This is your breakout iteration here. Breaks you out of the macro, and then this gap up right here takes you to the top of the tri-peak. For now, in the current cycle, that would be around $6. That would be your macro fractal break, and then you squeeze from there. So that's what we're looking for now. Again, the move is very symmetrical, and we have the same exact thing playing out over here. The tri-peak would be the middle of the move here, and it's more or less a W. So again, it's more or less a star bottom here. Taking a very, very long time to play out, but it is playing out. Your second and third bottom, the tri-peak in the middle, and we're at the equivalent of this bottom here. So looking for the straight line now into the squeeze to finish up the symmetry. It looks very good. So that is that. Now going over the current range and Friday's price action. A lot of people were like, what the fuck? Like, why are we red? We really weren't that red. And if you're looking at this just from a technical standpoint, it looks really good actually, where we would have came down to your third bottom here, and then you get the pop out of that range, and we have this resistance at 450 roughly, this yellow line up here. Pretty tough resistance up here. So from the bottom, the 401 bottom that we got here, break above the 450 here, reject it, come down, bounce off the previous range here, bounce back up to the middle of the range and consolidate here before getting another pop above that resistance. Again, you reject, come down, bounce off the middle of the range, test again, reject again, come down, crash back through the middle of the range this time, and then again test as support on top of the previous range here. From there, you bounce back up to the middle of the range, reject that, come even lower. We got that pre-market wick down, that crazy wick down to 389, but a nasty bounce off and then reclaimed back into the range. Broke right through the middle here, and then pretty much uptrend all the way back up to resistance. Nasty sell-off here, bounce off the middle of the range again, break through again, break back underneath again, break through again on Friday, and then on Friday came down to the middle of the range and carved a very nice bottom here. So Friday was red, yes, but this looks very good. Having came back down to the middle of the range, bounced off of it as support. This looks really good. So that's that for the current price action. And now getting into the tracking here, again, this would have been the channel that we were talking about, the uptrend channel that we were going to be tracking now, the breakdown to your third and final bottom here, and then this uptrend, this ascending channel here, the channel that we're tracking now. So when we got this bottom here at 401, could not break it, and then we got into the channel. So let's get into the tracking on that. I haven't showed this in a while. So we could start with this. This was old. I think this was from 2 weeks ago, not last week, the week before. This is where we were with the tracking. Getting into the updated version now, we are at the end of the channel. So we're at the point in the channel now where we should theoretically be gapping up, where you come down to your third and final bottom here marked by the green arrow. You get the pop off. You get the pop off in the green circle. From there, you come down to support. Come down to support, bounce up again, not as high as you do over here. Come down to support again, come down to support again. Then you get into the orange box here, another pop off, and you come down to support, another pop off, come down to support. You get the pop off in blue, the blue circle, same thing here. I have this white line drawn underneath to help you like follow the price action, pretty much the same on both sides. And that takes you to the break below the trend in the yellow circle here, more or less a crayon chart, but whatever. So you break below here, you bounce above, you reclaim the trend again, as we did, and then from the top of the trend, you break below one more time here, which would have been Friday's price action. If you were in my old Discord, we got a pop at 7 p.m. After hours. If you know, you know. It's looking pretty good for gapping up. We don't have to. We could just see upside intraday, but having said that the gaps align perfectly on the daily, I would expect a gap up here. You know, the flags that I have marked, well, the gaps, this red flag here would have been our final gap down, comparable to this, to your third bottom, which would be equivalent to this, and then you get the uptrend, and then the pullback here, and that's where we are now. So looking for this gap here, this blue flag, looking for this gap once again. Again, that would be our breakout iteration, our last. That would be the point where the 20 crosses the 50 EMA on the daily. That would be our breakout and pretty much the end of our macro as well. So that's that. Again, the tracking here looks great. We reclaimed the channel. We broke below the channel again on Friday. That's perfectly fine. That's what happened back here. And then actually, like I said in my last video, this was on a Friday. You break below the channel, and then the first day of the week, you just gap up. So gap up, question mark. Are we going to gap up tomorrow? Let's see. We don't have to. We could get upside intraday, or maybe reclaim the trend here tomorrow and then gap up Tuesday, something like that. I'm expecting upside this week, so that's pretty much that. Again, AMC and GameStop are the exact same exact stock, same movement, everything. The January squeeze, the June squeeze, and then the orange here is GME, and the candle is AMC. It's tracking perfectly, same exact stock on both sides. And here would be GameStop's flat portion versus AMC's. So again, both AMC and GameStop here. And by the way, these are the only two stocks that I'm in. Not financial advice to anyone else, but the only two stocks in my portfolio are AMC and GameStop. So for both stocks here, we're looking for a straight line now, which theoretically would be your MOS. I'm leaning MOS more than anything right now on the squeeze. So that goes for both AMC and GameStop. That's pretty much that. And I could jump into the fibs really quick. We can go over like the conservative price targets. So looking at the January squeeze, low to your high to your low, halfway in between 2618 and the 3618 on the January squeeze. So you came halfway in between. Again, the June squeeze, your low to the top of your January squeeze to your low, came up to the 3618 and the dot. So the January squeeze came halfway in between the 2618 and 3618. June squeeze came up to the 3618 on the dot. And then looking at what would be coming for the next squeeze, the current squeeze of our current cycle, from the bottom to the top of the June to your bottom here, halfway in between the 2618 and 3618, would be roughly $130 to $145. This is if we got an algorithm squeeze. If this could just continue to stair step like the way we're seeing here, you get the January squeeze come down, June squeeze come down, the upcoming squeeze to 130, 140 come down. That's if we got another algorithm squeeze. That would be your target, 130 to 140. I'm leaning more towards we're going to MOS though, and those numbers for me are pretty high. I'm not going to just start throwing numbers out there, but they're pretty high. One other thing I want to touch on is that you could really see when this became a meme stock. I mean, this is relatively normal price action back here, all the way down to until you get the flat portion, and you could really see the shift in behavior of the stock. You just completely, normal price action, up and down waves, and then you just get a spike here, January, another spike in June, completely different behavior. You could really tell when this play became a play, a squeeze play. Again, I'm leaning MOS here, and MOS would be anything over the 4764. So anything 200 plus on this upcoming squeeze, you're in MOS territory. I'm leaning we're going to MOS. If the reverse split went through, it would be anything past $2,000. Anyone saying the reverse split's going to kill the squeeze has no idea what they're talking about, by the way. So that's that. And just a friendly reminder that nobody's selling. So here's the OBV on AMC, you know, relatively flat. This is the macro perspective, you know, the one I always show. OBV completely flat back here. You get the January squeeze, OBV just rockets here, and then relatively flat. And then you get the June squeeze. And then from the June squeeze, from $72 all the way down to $3, OBV is flat, completely flat. It's almost at all-time highs still. From the 72 move, you know, prior to the ape dividend, this was 72, all the way down to $3. The OBV is pretty much at all-time highs. So this is not a pump and dump. This is the algorithm doing what it's going to do, running this on a loop. That's exactly what you're seeing. The market is fake. It's repeating fractals, and the algo is just running us on a loop here, and no one is selling. That's that. And you know, and I just want to throw this chart in here. I thought it would be pretty funny. The company I work for, the HVAC company I work for, this is our bank, Signature Bank here. And I just wanted to show the OBV of, you know, a meme stock versus, you know, an actual pump and dump like a bank. So Signature Bank, $375 all-time high, relatively flat OBV. And then you see the sell-off here. You can't even see where this shit is now. It's like 16 cents. But yeah, look at the OBV. Completely crashed here. That's what a pump and dump looks like on OBV. An actual crash here on OBV. For AMC, through all of this bullshit, $72 all the way down to $3, completely flat. No one's selling. We're about to squeeze. We're about to make a lot of fucking money. So this looks very, very good. One last thing that I wanted to throw in here, and don't come at me crazy. This is just purely speculation. But, you know, from MOAS, there's a possibility the market breaks completely. Before I even get into this, just trying to explain this the best way I can. So here's the macro on AMC, right? And the algorithm, as I mentioned multiple times, the market is completely fake. It's complete bullshit. The fundamentals don't matter. Balance sheets don't matter. Maybe for a normal company, a normal play, like something normal, like Tesla or Ford, or even Tesla is more or less a squeeze play. But you know, a normal company, not a squeeze play. Obviously, fundamentals are gonna play a big part there. For something like AMC and GameStop, fundamentals don't hurt. Doesn't hurt if the company is doing good, but it has nothing to do with anything. This is a squeeze play. It has nothing to do with fundamentals. And like I said, the market's fake. The algo is running us on a loop here. I just showed you OBV. No one's fucking selling. When the macro finishes playing out here, and this is just theoretical, if this was MOAS and theoretically there's billions of shares. Basically what would happen is the algo would flip to buy and start buying back billions of shares all at once. And the way that would work is whatever the ask is, the algo would just slap the ask and then jump to the next. So you have an ask at $10 and there's 1,000 shares. The algo just scoops those, buys those 1,000 shares. After $10, the next ask is $25. Then the algo jumps to that. So you'll just see a one tick on the stock, $10 to $25, and the algo will continue to do that until it buys back the billions of shares it has to buy back. So the numbers for MOAS, theoretically, if no one's selling, the number for MOAS is infinite. If there's theoretically billions of shares that have to be bought back, and you know, retail is just fucking diamond handing them and just, oh, what 100K, because 100K has been floating around for a very long time in the AMC community. I'm not saying it's not. It's completely possible. 100% it's possible. We just have to see how this plays out. But the algo will just be jumping ask to ask, you know, 10, whatever the ask is going to slap the ask until it buys back all the shares it has to. That being said, if there's billions of shares and no one's really selling until crazy numbers, this could get out of control, and the ceiling is infinite, and that goes for GameStop as well. So MOAS could be completely detrimental for the economy, the world economy, the stock market, everything. It could completely break the market and the world economy with it. You know, the dollar is probably going to be done with after this as well. I'm not even going to get into all that, you know. Really, it's just theorizing. But here, this is not theorizing at all. This is SPX, and the chart on SPX is a repeating fractal that dates back to the mid-1800s here. And I tried to throw this together the best I could. So we'll just talk about this really quick before I end the video. So here's late 1800s on SPX, S&P 500. So you play out this sideways W type move here. in all of the blue boxes that we see. So everything's labeled. It's just a repeating. You get blue, green, a megaphone, a bull run, and then you get a correction back into the blue. So blue, green, megaphone, bull run, blue, green, megaphone, bull run, over and over again since the 1800s. It's just been a repeating cycle over and over again. So starting back here, late 1800s, here would be your blue section. You break above it, you get this wave type move in the green, you get the megaphone, and each megaphone has 3 touches on the top and bottom. So right here you have 1, 2, 3 touches on the top, 1, 2, 3 touches on the bottom. Over here, 1, 2, 3 touches on the top, 1, 2, 3 touches on the bottom. Over here, 1, 2, 3 touches on the top, 1, 2, 3 touches on the bottom, just repeating over and over and over again. So we'll start back here where you have the first blue, you break out of that, you have the white line on top would be the top, you break out of that, you get the megaphone, break and retest on the megaphone. See that right there, you get the breakout and retest, and you get your bull run. So you get the bull run, and then right here would have been the Great Crash or the Great Depression, 1929, 1930s. You get this correction here on SPX, which takes you all the way down to the previous blue box here. And this was like a 90% crash here, the Great Crash, the Great Depression. It's just a correction on SPY. And then again, you get the W move, the sideways W type move. You break the top here. You get the green wave type move, and then you get the megaphone with the 3 touches, 1, 2, 3, 1, 2, 3. You get the breakout here. You get the retest, and then you get your bull run. And then same thing here, bull run all the way up here now, and then you get the same thing, this W pattern in blue that plays out. You break the top, you get the green here, and actually this knife right here would have been the 2008 financial crisis, aka the Big Short. This was more or less a double bottom more than a correction, and theoretically this should have came down all the way to the previous blue box. Not that it had to, but theoretically it should have, and we didn't. More or less, the 2008 financial crisis was more or less just a double bottom on the market. Really wasn't anything crazy. But anyways, you double bottom there, you break that to the upside. You get the green again, the wave type move. You get into your megaphone where you have 3 touches on the top and the bottom. You break out and you retest. So from all-time highs on SPY, and then you had that descending broadening wedge that took you all the way down. Really, that was just a retest here, and we bounced off. And now heading for all-time highs. So after all-time highs, and assuming this aligns with MOAS, SPX is due for a correction in a big way. I'm not, this is just theory. If MOAS were to break the stock market, which is completely reasonable, if you have multiple tickers running to infinite numbers, banks are going to be failing left and right. The stock market's going to be fucking completely broken. And theoretically, you could get this correction that we should have seen in 08 now, which would take us all the way down to the previous blue box here, which would be equivalent to $20 to $30 on SPX. And as a matter of fact, and I went and looked, there is one open gap on SPX, and it's right here. I know this is very small, but if you zoom in and look, this is a monthly chart, by the way. There's one open gap, and it's at $20. One open gap all the way through. I could be wrong. If someone wants to go check. The monthly chart on SPX, there's one open gap as far as I can see, and it's at $20 fucking here, which is the equivalent of where the 2008 financial crisis should have taken us for a correction that never happened. And then instead, we just continue rallying to the upside here. One other thing that I wanted to touch on is that every iteration, beginning of blue to the end of blue, it's playing out faster and faster. So right here, 810 months, 700 months in this one, and now 131. So it's speeding up. Each iteration here is playing out faster and faster. And SPX is due for a correction. And it's very possible that MOAS, from the all-time highs that we see, will be that correction where the entire market collapses, the economy collapses, global economy collapses, and shit just hits the fan, because that's what we're heading for. There's no happy ending to this. Anyone who's been in this play for a while now, any meme stock play, 2021, we were talking about market crash, banks failing. It's happening. When you can feel the shit in real life, like Signature Bank, my HVAC company that I work for, this is our bank. So when you can start feeling this in real life and seeing this shit play out, you're close. That's just looking at a fucking bank. Looking at the macro, we are close. We are very, very close to this thing taking off. And again, leaning MOAS, and SPY and SPX is it's due for a correction here. So MOAS breaking the market is a very real possibility. So just keep that in mind. And that's pretty much it for the video. Next week, I'm looking for upside. Hoping we get the gap up tomorrow. That would be beautiful. I would love to see a gap up tomorrow. There's anything crazy. We're not looking for anything crazy. We're looking for like $5-ish. High fours, low fives. That's where the gap up should be taking us to. I am expecting upside. I would love to see $5 this week. I'd love to see it tomorrow. If we get a gap up to $5 tomorrow, it is on. You know, that gap to $5, if we see that, the bottom is in, and we are in the uptrend, and we are dangerously close to breaking out of the macro and squeezing. So with that being said, that's the video. I'm already half an hour in. Hope everyone enjoyed their weekend, and I'll catch you guys tomorrow for an update of Monday's price action, and I'll catch you in the next one.